Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for Friday, January 24th, 2020. After weeks and weeks of waiting for it, we finally got the first sell signals in a while in the market, and that came today on impulsive break and solid 60-minute close below the price channel. So here's the price channel I've been highlighting recently, and right there you have the yellow line. That's a key level. Was taken out. We broke it earlier today. Let's zoom in, look at, see what happened here. We broke in, broke down, looked like we could get one more bounce off there, but as I said, I doubt we'd see the top of the channel again. We broke down, they snapped back, tried to close it right on the trend line, and pretty much did that. But the following candle, you can see here, I'll zoom in even tighter for you on the video. Following candle was a big red candle, and again a solid close. So we closed way down, way below the channel there with a big red candle. That's what you want to see. That's impulsive selling. That helps increase the odds a breakdown will stick. Now I will say this again: next week kicks off the earnings from the big market leading FANG stocks: Facebook, Amazon, Alphabet, Microsoft, and which one? Oh no, Facebook, Amazon, Apple, Microsoft, and Alphabet, in that order. And so we'll see what happens there. But again, as I did a video recently, yesterday, for subscribers of the site, I talked about how over the years, if a chart pattern is clearly bullish or clearly bearish heading into earnings, more often than not, of course that's not always, but more often than not, meaning well over 50% of the time, that's the way the stock goes. So as I often say, do not confuse bearish setups, bearish technical postures, with a bullish trend. You can have both. So for example, QQQ, like a lot of the stocks in the NASDAQ 100, have clearly been in an uptrend. There's been no mistaking that, but we haven't had any sell signals. So you've had bearish technical postures, you've had these divergences, and we're really zoomed in here on this 60-minute chart, but you can see the negative divergences have continued to build, and you had a long extended price channel getting very long in the tooth here. So that's a case of a bullish trend on a index, futures right here on NASDAQ 100, with a bearish technical posture, and so all you needed is a sell signal, and you got that today. So I will say it's Friday before the close. We have the FANGs next week, kicking off with Apple on Tuesday after the market close. So my guess is probably not a lot of fireworks till then. Like I said, that would be our first sell signal, which we definitely get a check mark today with the impulsive nature, solid close below. And then I also had a yellow line. The yellow lines were the salient levels on this chart at 91.10 right there. So, and that's about exactly where we hit today. So you get the lows I posted on the site. That's where we'd get a bounce. I showed the scenario in that update right after we hit that, bouncing up here back to the 91.74-ish level, and followed by another leg down most likely. However, I don't think we're going to see any fireworks. It is possible. I always say be prepared for the unexpected. That can sometimes happen when people think the market isn't going to do anything. But with a lot of those, all of them, I'm sorry, all 5 FANG stocks reporting either next week, and then I think it's Alphabet is February 3rd, if I'm not mistaken, the following week. You're going to have 4 of the 5 next week: Apple, Facebook, Microsoft, all the big ones. And that is going to most likely put the market in somewhat of a holding pattern. Now that we've had a sell signal triggered, we still need this one to go to really open the door to more selling, that 91.10 level. Again, we hit it today, bounced off it. And you can see, so I think it'll work something like this, as my guess. 3 days of trading until Apple reports. 2 days, but they report after the bell, so the futures can do what they want overnight, but you won't have the markets open until Wednesday after Apple reports, and we'll see what happens then. So we could kind of chop around for a while. We could back test here. Who knows? Near term, like I said, sell signals are intact until and unless they regain that channel with a solid close back above that level. So I expect some kind of chop. Maybe more of what we saw today. Today was what I suspected, some profit taking. Like for example, if you own Apple, I remember I bought Apple earlier in the year, back was it right here off the lows back in 2019. Had that as a long for a while, but not nearly enough. I wish I had this stock this whole time, but I don't. I'm a swing trader. I get in and out on most of these, although that would have been a nice long-term investment. Now, here's what I'm getting at. Look at this run off the 2019 lows. 120%. Who wouldn't be a little bit concerned about earnings? In other words, how much of a positive earnings report is already priced into the stock? And so I think that's what we saw today. We saw a little bit of profit taking. However, I say this often, Apple is one of the leading components. It's the largest one, actually, in the S&P and NASDAQ 100, and it has yet to break down. It did so today, but not very impulsively. Here's our price channel right there, very well-defined uptrend line, and just popped below there. So again, it's going to report on Tuesday. Who's going to make a, you might see a little profit taking. Who knows? Maybe it goes the other way around. Maybe people want to own the stock. There's a little bit of a frenzy, a kind of a FOMO trade going on now. I don't know, but I would say not a whole lot between now and then. But what I can tell you, these are the levels. If it breaks below there, that's bearish. And as I said in the video I did yesterday, where I covered the all the components of QQQ that were reporting yesterday, and as I said earlier, usually you will see more often than not stocks that let me sort this here. Those trades or those stocks that have a clearly bearish or clearly bullish technical posture heading into earnings, more often than not, that's the way it'll go. So let's look at what happened. So the ones I covered yesterday were these 5 right here. These were the 5 that reported yesterday: Intel, Comcast, Intuit Surgical, Skyworks, and American Airlines right there. And you can see all but Intel. Now, like I said, it doesn't always happen. Intel was up today, but the 4 others are 80%. 4 out of the 5 clearly down following earnings. And as I said, especially these 3 clearly had bearish technical postures on the charts. And so, like I said, my expectation, as did Intel, but at least I got 4 out of the 5 right, and 3 out of those 4 right. This one had like I said, I didn't have a strong opinion. It was pretty much a neutral chart. This one's in a symmetrical triangle pattern, but it is in a downtrend, and you can see it also was down today. So there's an example of the charts playing out. Again, not all of them. Like I say, more often than not means more than 50%. So if you want to, use that strategy, it's a little bit of aggressive strategy, but we call them earnings plays, where you take a position long or short before earnings. I would never pick just one and go that route. That's gambling. You want to spread your bets. Just like with investing, don't put all your eggs in one basket. So if you took these 5 that were reporting on Thursday, overall you would have actually made money. You can see that the weighted average drop 4%, almost 5, 4, over 2% offset the gains in Intel. And I'll do the same thing on Monday or over the weekend for those components. We'll probably just focus on the 5, but I can tell you now, I've already done that for you guys for the most part. I've at least subscribers. I've covered the FANG stocks lately, and they're all in these similar technical patterns. Negative divergences. You have a sell signal pending this, a price channel that's very long in the tooth, extreme overbought conditions going on as well right there. Like I showed you can see down here, this is the RSI right there, extremely overbought. Weekly chart shows this right there is just the percent that it's trading above the 200 or 40-week moving average right there on Apple. So if I put a line right there, oh, there we go. Let me get rid of these guys here. Drag that out so I can click, delete that one. Why won't it go away? Here, let's see. Alrighty, let me pause this and get that guy out of there. Okay, get rid of that tool. So you can see Apple is getting really stretched. This is the 40-week moving average. It does a great job of defining trends, and we're well above it. In fact, we're getting kind of nosebleed territories usually when you get that high. For example, you got that high there. The stock made a very slight marginal new high a couple months later, and then dropped 45%, 26% there. So again, we're getting stretched, and so it's all about risk reward, and the risk reward remains unfavorable because when you have such lopsided trades, one-sided trades, you can get a sudden rush for the exits when we have too many longs in there, not enough shorts. Here's QQQ, similar thing. I like to use that 40-week exponential moving average does a pretty good job of defining trends. You can even see, throughout the bull market we've had some corrections here. Big drop there in the Qs right there back in 2015. Couple big corrections. Actually, that was over a 20% drop in QQQ. There's that big 20-something% drop in Q4, and you can see that's when you trade below that 40-week. Otherwise, the 40-week, which is the same as a 200-day moving average if you're on a daily chart, really does a good job of defining uptrends on these tech stocks. But what I like to do here is, take a look at how far above. It's a custom indicator I created to show me in percentage terms how far prices are trading above that 40-week moving average. And so this number it's different with every security, but on QQQ it's about the $15 level. When you get to that, 15% level. When you get up to that 15% level, that's usually where you get a correction. That doesn't look like much. It was probably a double-digit drop right there, and you set up and put in a divergent high before the big drop came. And last time we hit it, we had one there, followed by a correction, and then divergent high, another correction. But you can see you get up there, and that's usually where the market stalls out. A rally stalls out because you're that far, and then what happens? It needs to come in and visit that 40-week moving average again. And like I said, this is log scaling on this chart, so it may not look like a lot, but these drops, if I measure them, this one back here, when we hit that extreme 15% reading, that was about the box on the top tells me about an 18% drop. So that's where we're at again. Extreme doesn't mean we can't get a little higher, but that's where we're at. So again, most important thing, we can go over all that. That's long-term stuff. I've covered that before. The most important thing today is we finally had a decent sell signal. Here's the price channel on QQQ. I started out with NQ, the NASDAQ 100 futures. Here's a price channel. Breakdown, back test, and then boom, reversal so far. So we need to take a look at this other chart. In QQQ, I have this, what I call the BOD, or benefit of the doubt trend line. It's pretty much the same one I just showed you, the lowermost trend line on there. And that's it. I don't know if there's much else to say. We could look at SPY. I already covered that recently. SPY broke down before QQQ. There's a 60-minute chart of SPY. I'll zoom in a little tighter, and it was just waiting for QQQ's lead. QQQ had held support as SPY broke down. At the same time, right after SPY broke down right here, that's when QQQ last hit the bottom of that price channel and had one more thrust up within the channel. And today it broke down. So on SPY, you're looking at wave one down, counter trend rally, and the second wave down following the breakdown. Looks to me like more to come. We'll see again how those stocks report earnings next week. Will certainly or almost certainly dictate where the market heads from here. But that's it. Don't want to really beat a dead horse because there's not much more to say other than that we've got the first decent sell signals in a while. And like I said, I went home. I took some mild short exposure home since all those big companies are going to report next week. I'll either add to those positions only if I hate to say only if one thing or another happens, but ideally I want to add to those on weakness. In other words, I want to see this level go. That's my next sell trigger right there. When 110 goes with conviction, especially if it happens after Apple reports on Tuesday after the market close. And I'm still targeting down here, this target zone from about 88, 90, same target zone I've had for a while. We just hadn't had the sell signals to activate or enter a short trade. And there's 86.94, pretty much the bottom of that zone. And what I think will happen, like I said, maybe a little grinding around. Even if we break down, nothing big until Tuesday. Apple's out of the way and some of the others. But then if things don't go the way of Apple, in other words, if there's a negative reaction to earnings, I think it should be a swift move down. Because of the extreme overbought conditions and again divergences, things that have been building. And if not, if Apple ramps it up, then what you want to watch for is a recovery of this price channel. That certainly would not help the bearish case at all. You have a breakdown right here, this trend line. There's plenty of room to back test it before Apple reports, but if we get much above it, that foils this whole breakdown. That means that was a false sell signal. And I have said that you have an increased risk of whipsaw signals right before major companies report earnings. So like I said, the key is here, take the breakdown on face value. At least that's what I'm doing, but don't load the boat right now. It's not a load the boat short opportunity yet, and mainly because we're looking at 60-minute charts here. We still plenty of work to do on the daily chart, and what you want to watch for there, this trend line right here. Let me move this divergence line up a little bit. There's the trend line we broke today, the 60-minute trend line right here. That's at bottom of that 60-minute channel. And as you can see there, I'll take everything away, nice bearish engulfing candlestick. So when I see a bearish engulfing candle, that is what I call a potential topping stick. I like to see an additional red candle, and as I like to say, the redder the better. I don't expect a huge down day on Monday because of Apple coming up and all those other companies, on Tuesday and after that. I would welcome it. Even just a red close, anything to close. When you get a bearish engulfing, ideally you want to see, you don't want to see prices move up much above the bottom half of the channel, or the midpoint of the, not the channel, the candle. So one shorting up strategy I use after an extended uptrend, if I get a bearish engulfing candle, that's a short entry, even on the candle itself. I take a half position usually, and I'll put a stop about a third of the way up the candle or so, certainly no more than top of the candle, because if we move back up, then you've taken away that most of that sell signal. But a bearish engulfing, if you're not sure what I'm talking about, that's when you engulf the previous candles. In this case, the last 4 trading sessions, last 4 days of gains have been wiped out in just one day. So, and what you look at is the body of the candle, that red part, the fat red part, and you want to see it wipe out the bodies of those previous candles, or the entire candlestick, which it has. And again, not a full-on sell signal yet. It's a potential sell signal with confirmation. Get a red candlestick. If it weren't for all those things coming up, if I got the red confirmation candle, I would probably add to and bring it up to a full normal size short position. But I think I'll wait until we see what happens after Tuesday. And like I said, the more downside you get, the better it is to confirm that signal and give you a higher probability of the trade playing out for a swing trade. Now, then I'll turn my focus, of course, out here to this daily time frame, and we'll look at things like this and start outlining some price targets down there, including this uptrend line there. Let's wrap it up here. It's a weekend, like I said, nothing crazy. Anything can happen, but we'll pick it up on Monday. And I think things will really get interesting after starting Wednesday, is where we should have some clues. Not always. Sometimes you can have Apple report, and it's mostly a non-event. But again, right after Apple, you have all the rest coming out too: Facebook, Microsoft, Alphabet, Amazon. And once that's out of the way, that should set the tone for the market. Are we going to continue to rally? Will these be whipsaw signals? Are we going to extend these divergences and overbought conditions? But I'm leaning towards the downside here. All right, we'll wrap it up here. You guys have a great weekend, and we'll pick it up on Monday. This has been Randy Finney with Right Side of the Chart.